everyone? Welcome to the Trading Market Technicals morning call video for Wednesday, February the 5th. Did get a little bit of a bounce, a little retracement rally. Dow Jones up 72, Nasdaq up 34, S&P up 13, and the Russell up 8. Not impressed at all with the Bulls' performance. Actually, I think the markets are in trouble. If we cannot get up some of these key pivotal resistance areas on the charts, I think the markets are due for another flush. Now, we're down about 7% from the highs. So, logically, we are in this bounce area. And, looking at the charts yesterday morning when I pointed out a few points, logically, it is overdue. But I'll tell you, not a good performance today at all. Dismal volume, dismal price action, markets that were down. Dow's up 72 points when it literally has gotten crushed yesterday, mind you, of the other several days. So I am looking for an opportunity to get short the market, and I'm looking for the markets to possibly bounce into some resistance area and to give me some sort of a sell signal, and I will be looking to get all over this market short. Markets are in trouble again, and I think the Bulls need to step up to the plate immediately. Otherwise, I think we can see an additional maybe 3-4% flush to the downside. All right, so let's go right into it. Not much has changed. The market's with the Dow up 72 points, so I don't see much. But what I will show you is the McClellan oscillator here, and as you can see, we close outside the band, we pop back up again. And this is a very reliable indicator. And if you're not looking at it, you should be at your end-of-day analysis. It's absolutely excellent to give you some sort of a clue that when possibly the markets may be turning. At this point, we're talking about the upside. Okay, let's talk about the VIX. Now, the only thing what I do like so far is that we did close down inside the Bollinger Band. So that's going to put a buy signal into the S&P, okay, sell signal into the VIX. However, if the markets sell off and we get back up again, then all bets are off, and we have to reset the signal. So right now, this is going on a buy signal for equities, and we could follow through tomorrow, absolutely. Thursday, we have ECB speaking about rates, so that's going to be a big driver. As you know, we are in a worldwide market, and every other market is affecting our market: Japan, Nikkei, emerging markets, and of course Europe. So we need to pay attention to what's happening here, guys. Remember that. CBOE. As you can see, we have a little bit of a tick up in volatility. Fear is creeping into the marketplace. Still bullish, but a break above this little zone area here, then you could see volatility starting to pick up, and market participants starting to buy more protection of puts. Now, if you're looking to protect your portfolio, it should have been done 50, 60 S&P points ago. I wouldn't be looking to protect your portfolio when volatility is extremely high. It's just not worth it, okay? Let's take a look at WTI. Did very well today. I really like the oil and the oil services and oil and gas. But again, we need to see oil start to break. And again, when we have a weak market, everything will get sold off because you have extreme margin purchases on stock, and when that happens, and I've stated that several months ago, everything gets liquidated. So good stocks, bad stocks, and really right now what you want to do is take a step back. Let's digest what the market is going. And right now, obviously, we're in a short-term downtrend. That doesn't mean you can't play the long side. We just want to play quality stocks that haven't gotten really beat up, that's holding up relatively well. And what you want to look for is good quality stocks that just really selling off in sympathy of the market. That's really to buy the stocks you want to buy when the market does turn. Okay, but I do like crude oil here. As you can see, we had a nice engulfing candle. Let me just open it up again. We're really going to need to take out right here 98, 98, 99 and a half. But let's take it one step at a time. Let's see if we can start breaking out here. If we can really start to break out, then I think we can literally. And I mentioned this yesterday morning. You can see here the thin zone. We can run up easily to the 102, 104 area, okay? But once oil starts to go, let's dial down and look for some of the oil service sectors and the oil and gas exploration, okay? Now, as we know, we talked about the yen. Don't have to be a currency trader. You need to know what currencies are doing now in this day and age. I'd be watching what the FXY does. And again, we had not a bad close, which is good for equities, long, risk on. However, we have an inside day. So really didn't tell me much of anything. That's why I'm a little concerned. I'm a little concerned of this market because we couldn't get a higher move from yesterday, and the yen really was kind of bid up most of the day. So a little concerning here that maybe the market may not even follow through and start to sell off again. I mean, one day really doesn't make a trend, does it? So we want to really pay attention to see what happens to the upside. Now, I'd like to see the markets rally for a couple of days, 2 or 3 days, strong, cover the weak shorts, and then really give it one more shot to the downside before we look to buy the market again. Take a look at the ES. As you can see here, we have a nice little confluence area of support, which was broken, now resistance, and we do have this other uptrend line from November 2012, and this is basically clinging by a thread here. And as you can see, not even 50% of this candle. So this is not a good sign. Not a good sign at all. That does not mean that the markets just can't go rally really hard today. But remember, guys, let's take it one step at a time. We're going to need to take out yesterday's high, which would be 1753.45, and then we really, if you want to really alleviate some downside pressure, 1795, 1800. But believe it or not, that's going to be the spot to look to get short. Once price gets up there, we'll look for a sell signal, and then we'll look to get short the market. Now, if price blows right through it, the next back test, next higher low from the previous low is actually going to be a buy in the market, okay? But again, we'll take it one step at a time. Let's see how the markets rally into this area of resistance here. Okay, but that's going to be the area right now, 1800. We were looking at 1812, 1813. We just dropped that down because now we have new resistance. We have the 8, the 20, the 50, and we have horizontal resistance up top. So that's going to be pretty significant resistance right now in a weak market to break through, okay? Unless we have some sort of catalyst really coming in. Wanted to show you this again. As you can see, I put this out about a couple days ago actually, and really nothing has happened here other than the fact that we had an inside day in the cash, GLD inside day, and of course TLT, the bonds, ETF, same thing, inside day. But this is dangerous. I mean, this is really dangerous here. When you have the markets at resistance and broke support, this is telling me I think we have 1 or 2 more decent downside days to get to that 8 or 10%, maybe even more. I mean, what happens is you look for an 8 or 10% correction, and all of a sudden something snowballs, and now we're looking at a deeper downside correction. So again, we've got to take it one step at a time, but this does not look good. We want to see gold start to revert lower, bonds revert lower, because what's happening is money's flowing into these safe havens, utilities, gold, and even gold didn't really do too much. Still, money is flowing into gold, and then of course bonds breaking out of resistance. So something that we want to really keep an eye on here, okay? And even if you're day trading, you want to know what the dynamics of the markets are. It's very important because that'll give you more confidence in your trading during the day. Okay, spiders. All right, inside day, pretty much the same. Yes, we are oversold. That doesn't mean it's a buy signal. Dismal volume. Really not impressed here, guys. We need to really take back this candle and get back above this uptrend line. Other than that, we back tested into a bear flag pattern. I'm going to look to sell spiders around 177. IYT transports, again, not bad. A little bit stronger than the spiders, but this is normal. Retracing back 50%, and then the next day you can literally revert to the downside. So something that I'm going to be paying attention to. Transports are definitely key to watch where this market goes. And as you can see, the Russell really put in a spinning top here. Nothing going on. Literally nothing going on here. Not good. Not good. I would have loved to see Russell really gain some momentum to the upside. That would have told me that people are more comfortable taking on risk, and that's not the case here. Qs, same thing. Apple did well. I'll show you the chart on Apple. Apple did okay. We have diamonds literally still below the 200-day moving average. The longer it stays below the 200, the deeper downside you're going to get. Why? Most funds, bigger money, smart money, will follow the 200. If the 200 is below, they sell stock and reduce exposure. When it's above, they start looking to buy stock and add exposure. Okay? So that's really how it works. Really simple. If we continue to stay and we take out this low 153 in the diamonds, which is the Dow Jones ETF, look for a deeper downside correction. No question about it. Here's the gold. As you can see, we've been hovering around here for quite some time. We're either going to break out. I think we're going to break out. Again, this is not actionable, but I do think that I think gold breaks out. I think the market flushes one more time before gold. Gold is in a downtrend. Gold is in a bear market. We know that, but gold has tendency to give us and produce some really nice retracement rallies to the upside. Okay. And here's the XLP, oil and gas, and doing quite well. But I just want to show you this is what we're doing. We're stalking the ETF in that sector, right? The oil and gas exploration. Here's the XLE mentioned yesterday morning. I really like the oil and gas. I like the oil and gas, but I do like the oil services. Schlumberger, Baker Hughes, Halliburton. Those are the top three I'm looking for in order of sequence of preference. So I do like. I'd like to see it get back up. That doesn't mean you can't short the ETF if you wanted to on a run back up here. But I don't. Even if we got a bigger flush, I'd be looking for certain areas to look to start to nibble and long. Of course, we need to see what the performance of crude oil is going to do as well. That should reflect the XLE. And here's the USO oil ETF, and again, it's just sitting right above the 50, not doing anything much, and it can actually get down to the 20, and as long as it holds that 20 and puts in that higher low from this previous low, easy to manage, you start nibbling long here. Okay, so you could either look for a deeper downside correction somewhere around here. We wouldn't want to let it get past 33.80, or a break above this little area here, which should give us a decent move to the upside in USO. Here's the construction. I'll tell you guys, they are really holding up well in this really crazy market, doing quite well here. That doesn't mean tomorrow it can't falter, but you know what? Let's watch it. If the market stabilizes here, I think you're going to get a good move in this ETF. Here's the XHB. Really not doing too much, holding by the 200, but a lot of the builders are doing well. Look at Lennar. I mean, really today, out of this terrible 6-7 days, it's actually up. And this is fantastic. That's what I'm looking for. Look at Pulte Homes. Beautiful. Consolidating outside of the bullish, the bull flag, and now consolidating again for another move higher. So now you have another consolidation area in Pulte Homes, another break above the 2050. You are easily going to get at least $1 to $2 out of this. And as you can see why, look at this. And let me just do this, matter of fact. I just want to put this horizontal trend line. A break above that, beautiful and easy to manage, right? Higher low from this previous low. This is key and pivotal. This is something that I love to see. And if the market was actually good, I'd be pouncing all over this to the long side. KBH. Now KBH, took it a little bit on the chin. Nothing bad, but back testing, giving you a buying opportunity here. So this is something that's actually nice as well. XLF. Now, yield started turning down, so obviously the banks are going to get a little pressure from yield moving lower. But again, buying opportunity. I do like the banks in 2014. You just got to pick your spots, and timing is really critical. Remember, guys, if you're looking for a longer-term picture, find out what the amount of dollars you are going to commit to your position, and then figure it out by the number of shares versus the stock, and then add accordingly. You won't want to add too much. You don't want to add too little. Add exactly what you're willing to risk in dollars. Convert that into shares, and you're good to go. Citibank. Terrible price action, I tell you. I am very shocked. I say it all the time. I am very shocked the way this thing has actually acted. It's just absolutely terrible performance. JP Morgan, doing better than Citi, obviously. Above the 200, where Citi is actually below it. And then, of course, we got Goldman Sachs. I think it needs a lot more work. Doesn't mean that it can't move up from here, but I really like to take the high of this engulfing candle before I look to get long Goldman. And then lastly, of course, is Apple. Okay? All right, guys. Keep on the toes here. Remember, when you have risk off, it's much faster when you're looking to buy the market. When they're selling and people are nervous, they sell and ask questions for later. Remember that, okay? All right, guys, have a great day. Use your stops, and let's see where this market takes us. I would love to see continued rally, at least to the upside, somewhere into that 1800 in the ES, and then look for an opportunity to short the market again. And then once we get that opportunity and it breaks lower for the second time, all rallies are shortable, okay? Until otherwise. Remember, things do change, but until then, what I'm seeing, I'd be looking for a retracement into the 1800 and look to get short the market on the next trigger. Have a great day, and we shall speak to you tomorrow. Take care.